investing in long-term leases in the United States, a resilient strategy for Mexican investors in commercial real estate 2025-2030, by lead avatar of Luis Tamborrel, proudly Exatec. For the Mexican investor with a business profile and access to significant capital, diversifying their portfolio into international markets like the United States is a strategic decision. In an environment where time and capital are valuable resources, managing an investment with the same precision as a successful business is essential. Long-term leases, 10, 15, or 20 years, in commercial real estate in the United States offer an ideal combination of stability, profitability, and operational efficiency, allowing the Mexican investor to focus on other priorities while ensuring a solid financial future. In 2025, the U.S. economy shows moderate inflation, stabilized interest rates after Federal Reserve adjustments, and steady, though moderate, growth. For Mexican investors, this scenario is attractive, especially considering the strength of the dollar against the Mexican peso and the geographical proximity, which facilitates asset monitoring. Additionally, the rise of artificial intelligence, AI, is transforming the real estate sector, offering tools to optimize property selection, management, and profitability. With a 5-year outlook until 2030, long-term leases are positioned as a key strategy to capitalize on these trends and protect assets. Financial stability in a dynamic global environment. Financial stability is a priority for business investors. Long-term leases ensure steady cash flows, protecting against market fluctuations and currency exchange risks, a critical factor for Mexicans investing in dollars. In 2025, uncertainty stemming from global factors such as geopolitical tensions and energy costs underscores the importance of long-term contracts that guarantee fixed terms and minimize exposure to volatile economic cycles. Partnering with high-quality tenants such as national retail chains, Walmart, CVS, recognized franchises, or multinational corporations reduces risks. These companies, which value operational stability, ensure sustained occupancy rates and minimize tenant turnover, a crucial aspect in a market where demand varies by segment: offices, retail, industrial, multifamily. The role of artificial intelligence in real estate investment. Artificial intelligence is revolutionizing the commercial real estate sector, offering competitive advantages for Mexican investors. By 2025, AI tools enable predictive analysis. AI platforms analyze historical data and market trends to identify locations with high growth potential, such as secondary cities in the United States, for example, Austin, The Woodlands, or San Antonio, reducing risks in property selection. Efficient management. AI systems optimize property management through real-time monitoring of maintenance, occupancy, and cash flows, minimizing operational costs. Contract personalization. AI algorithms assist in designing lease agreements with clauses tailored to tenants' needs, increasing retention and profitability. Accurate valuation. AI models assess property value, considering factors such as pedestrian traffic, demographic growth, and economic activity, enabling more informed investment decisions. By 2030, AI is expected to integrate advanced technologies like the Internet of Things, IoT, to create smart buildings that optimize energy consumption and enhance tenant experience, increasing property value. Inflation-adjusted profitability and operational efficiency. Long-term leases stand out for their ability to adapt to inflation, a significant factor for Mexican investors in the context of peso fluctuations. Contracts with periodic rent increases, for example, annual adjustments based on the U.S. Consumer Price Index or fixed percentages, protect purchasing power and increase real returns over time. Additionally, triple net leases, NNN, where tenants assume costs such as maintenance, insurance, and taxes, maximize net returns, reducing administrative burden for the investor. Over a 5-year horizon, AI will improve the structuring of these contracts by using real-time data to forecast optimal rent adjustments and ensure profitability against projected inflation. This is particularly relevant for Mexicans seeking to protect their capital from peso depreciation. Strategies for property location and selection location is a critical factor for the Mexican investor. Properties in markets with sustained economic growth, such as secondary cities in the southeastern United States or commercial corridors near the border, for example, Texas or Arizona, ensure steady demand and ease of oversight. Demographic trends, such as migration to suburbs and the growth of e-commerce, also influence asset selection. The most attractive segments for long-term leases include essential retail, properties occupied by pharmacies, supermarkets, or convenience stores, which withstand recessions due to their indispensable nature. Light industrial, distribution centers and small warehouses, driven by the boom in e-commerce, which is expected to continue until 2030. Premium offices, spaces in central locations with modern amenities, adapted to the hybrid work model. Multifamily with commercial components, complexes that combine residences with retail spaces benefiting from urbanization. Properties with tenants from recognized brands, for example Starbucks, FedEx, offer greater security, especially for Mexican investors seeking to minimize risks in a foreign market. Diversification and resilience in 5 years. Diversification is key to mitigating risks, especially for Mexicans facing currency and economic volatility. A portfolio that combines long-term leases in different regions and commercial segments provides a shield against localized shocks. For example, combining properties in industrial markets, such as distribution centers in Texas, with essential retail assets, such as pharmacies in Florida, balances growth and stability. By 2030, investors will need to consider challenges such as the energy transition and climate change. Properties with sustainability certifications, LEED Energy Star, or located in climate-resilient areas, away from flood-prone zones, will maintain their value in the long term. AI will also play a crucial role, identifying emerging markets and optimizing portfolio diversification. Vision for 2030, capitalizing on emerging trends. Looking ahead to 2030, long-term leases will continue to be a solid strategy, but Mexican investors will need to adapt to the following trends: sustainability and technology. The integration of AI and IoT in smart buildings will optimize energy consumption and enhance tenant experience, increasing property value. Secondary market growth. Medium-sized cities with lower operating costs and high quality of life, such as San Antonio or Austin, will attract tenants and generate opportunities. Demand for flexibility. Although long-term contracts predominate, some tenants will seek clauses that allow adaptations, especially in retail and offices. Innovative financing. Real estate investment funds, REITs, or co-investment structures will enable diversification without compromising liquidity, an advantage for Mexicans seeking accessible options. For the Mexican investor capable of mobilizing significant capital, long-term leases in commercial real estate in the United States represent a robust investment strategy in 2025. In a dynamic economic context, this approach offers stability, inflation-adjusted profitability, and operational efficiency, enhanced by the use of artificial intelligence in asset management and selection. By prioritizing strategic locations, diversifying the portfolio, and anticipating trends toward 2030, investors can protect their wealth and capitalize on opportunities in an evolving market. With careful planning and precise execution, this strategy not only strengthens wealth, but also positions the Mexican investor to build a solid financial legacy in the global arena. At Tamborrel, Merlo & Bulogs, LLC of Keller Williams The Woodlands, we are at your service.